In this week's episode of the Brisbane Property Podcast, we'll run through the market update. And just as an insight for everyone, if you've got $1 million and you're looking for a house in Brisbane, next month you'll probably need $11,000 more.
And if you're shopping with $1 million and you're looking for a unit next month, you're likely to need up to $17,000 more for the same property. All of these insights in today's episode.
Welcome to the Brisbane Property Podcast with your hosts Melinda and Scott Jennison.
Hi everyone, and welcome back to another episode of the Brisbane Property Podcast with Scott and Melinda Jennison. And we've got market update.
Yes, we love Market Update. Well, I can say honestly, hand on heart, I love Market Update podcast time because it gives me the opportunity to help all of you, our listeners and our viewers on YouTube, understand what is actually happening out there in the Brisbane property market as we unpack all of the data that's come through over the last 4 weeks. But more than that, we're going to give you insights in terms of what's happening on the ground. And our team have seen a huge shift throughout the month of September. So really excited to be able to bring you this update.
And before we jump into it, last week Melinda and I attended the REIQ Lift conference. And big shout out to the people that come up and said hello to us and said they love listening to the podcast. So it's always nice to run it, and especially people that are in the business, the industry of real estate, listening to the podcast and enjoying the content we put out. So hopefully, we'll continue to do that and make people enjoy well, not make them enjoy the podcast, but hopefully they continue to enjoy the podcast. So interesting. Brisbane dwelling values. Again, we've seen them go up again in the month of September.
Yeah, it's not a surprise to us, obviously, being out and about on the ground throughout the month of September. We've seen that demand surge, especially in the affordable end of the market, off the back of the announcement of the first home buyer guarantee scheme. So what we've seen is almost FOMO come back into the market at price points in the affordable end. And that unit and townhouse market, especially in inner city and middle ring locations, it really has become so competitive. But also housing markets in similar locations. There were reports across the month of one property on the north side of Brisbane with 54 offers on a single property. Our team have experienced multiple offer situations where in excess of 20 separate offers on an individual property have been reported. So this is very competitive circumstances. Now, at the same time, there's also some properties that don't get offers and other properties that you turn up to an auction and there's no registered bidders. So we are in a very mixed market right now. And unless you're out and about on the ground to understand what is popular and why it's popular and what's not popular and why it's not popular, you'll really be very confused about the current market here in Brisbane.
I think as you touched on that, and even some listeners might probably go, oh, they've made up the numbers of the 54 offers. It's actually real. That sub 1.5, sub 1, especially, super competitive. And if you're not here in Brisbane, it's actually real. We are going to properties where if there's under 10 offers on it, we're shocked. But we're talking sort of 18 to 20 to. There was one that was 45. I know you said there was one that was in the 50s. Mm-hmm. So that's how competitive it is in certain parts of the market, in certain locations. Okay, so
it's not across the board.
It's not across the board, but in certain locations at certain price points, that is the sort of activity we're seeing as well.
And the other thing that's coming through in the data, and it's certainly what we're seeing on the ground again, and this is specific to Brisbane, and that is that Brisbane units compared to all other capital city markets continue to be the standout performer. So every other capital city market has seen detached houses outperform units throughout 2025. But here in Brisbane, we've bucked that national trend. And in fact, for the 7th consecutive quarter, unit values have outpaced house values. And we've seen 1.7% lift across the month of September in units compared to 1.1% in growth for houses. We're going to really unpack that in today's episode as well.
Yeah, we'll go through all the numbers there as well. Obviously, a lot of demand on that was the federal government's decision to bring forward the first home buyer guarantee scheme.
Yeah, just for people that might not understand that, there's been a lot about this more recently, but what this has enabled some buyers to do is that first home buyers will enable eligible purchasers to buy with just a 5% deposit. Now, for most people, if you are to buy with a 5% deposit in ordinary circumstances, you would be required to pay lender's mortgage insurance, or what the acronym of which is LMI insurance, which adds a significant sum to the loan balance. And that's because of the risk of such a low deposit. But with the federal government's home loan guarantee scheme, instead of that buyer having to pay lender's mortgage insurance, the government guarantees the performance of that mortgage. So it significantly reduces the upfront barrier for first home buyers. Instead of saving for a higher deposit to avoid that lender's mortgage insurance, they're able to get into the market without taking on the additional debt associated with lender's mortgage insurance. Now, there are no income caps for first home buyers. So regardless of how much income first home buyers are earning, they will be eligible. What exists is price caps in certain locations. Now, here in Brisbane, the price cap is up to $1 million. Now, that covers more than 90% of suburbs across Greater Brisbane if you're looking in the attached dwelling segment. That's the unit and townhouse market. It's far fewer locations if you're looking in the house market or the detached dwelling segment. So this is another reason why we're potentially going to see some uplift in demand in that attached dwelling segment or the unit and apartment market. Now, I will also say that when this was announced, we did see a huge surge in buyer demand even before it came into effect on the 1st of October. And this was experienced throughout the months of September. Remember, the data that we're talking about today is the data reported at the end of September, but these are settled sales. So in fact, these are contracts that were entered into likely back in August. So when we get to the end of October and we're hearing what the data is showing us for the month of October, these are the transactions that have happened in September, and we are expecting those to see a jump once again.
Yeah, definitely. It's an area that we've seen on the ground a lot of demand and a lot of
competition.
I guess buying frenzy in a way.
Yeah, it has been.
It did feel like that when as soon as it was announced, it felt like everyone wanted to get in before the 1st of October. Now it's continued, and everyone's obviously the ones that can afford that or are eligible, I should say, for that grant, that scheme, then they're the ones that are in that market as well. So again, it puts more pressure on it. Great for first home buyers if you think about it.
Absolutely.
Because everyone talks about, it's really hard for the people these days to save that amount for the deposit. Well, that gives them into that property market, but it's a very, very tough market.
It's very competitive.
What you're buying into as well.
Now, let's not underestimate the impact that any surge in demand could have on monetary policy. That's the Reserve Bank of Australia and what they're likely to do in relation to interest rate movements. So we know that throughout September, the cash rate did hold steady, and this is following the rate cut that we all experienced in August. Now, if the first home buyer guarantee scheme does in fact have the stimulatory effect that we feel it may, the scheme itself could actually delay further rate cuts. So this is something that the Reserve Bank will be monitoring very closely. We certainly think it could also have an inflationary effect, and if not the scheme itself, just the impact of the perception of more buyers coming into the market as we experienced in September. We saw those investors and other buyers make decisions or fast-track their decisions to get in before the perceived surge in first home buyer activity. Remember, for any first home buyers in the market, they still have to meet serviceability requirements to get a loan. So even though the deposit hurdle is reduced, they don't have to save 20%, they only have to save 5%. They still need to show based on their income that they can service a loan. And right now, with the rules from APRA in place, serviceability is being assessed at 3% above the current rate that's being offered. So any new mortgage holders are being stretch test, and that may actually, in fact, exclude otherwise some first home buyers who could be eligible because they do still need to meet those servicing requirements.
Now, you being the king of data and numbers, Melinda, I'll let you run through our listeners. So obviously, the economic fundamentals. So we saw consumer sentiment rose again in September as well.
Yeah, so this is the Westpac Melbourne Institute Index. It's 12.8% higher than a year earlier. So the month of September itself actually fell away, and we're likely to see that fall again throughout October, but annually it's increased. So looking on a 12-monthly basis. Real wages, other thing that we're watching quite closely, they have increased 1.3% annually, and this is the strongest level since mid-2020. So this is actually something that the Reserve Bank of Australia will be watching very closely, because the labour market does remain very tight. Unemployment rates are still steady at 4.2% across the nation. So economic growth itself has also surprised to the upside in the June quarter. So what this means is the economy is doing a little bit better than what the economists predicted or what was expected. Household consumption, that increased 2% year on year against the RBA's forecast of 1.5%. So what does this mean? It simply means people have more surplus cash flow to go and spend money on consumer goods and services. So again, if we spend more money, this can have an inflationary effect. And these are all the things that impact monetary policy and contribute to whether the Reserve Bank increases or decreases those interest rates. So obviously, these conditions all underpin the policy makers' decisions in terms of what they're planning to do, but they also influence ongoing housing demand in some way as well. So this is what the regulators and the policymakers look at, some of these indicators, in order to determine whether to tighten up that monetary policy or, in fact, whether to loosen it a little, and that is in the form of interest rate movements.
And then obviously Brisbane, when we're talking about supply, it is the greatest challenge that we've got at the moment. At the end of September, total advertised listings were around 31% below the long-term average. And sales volumes, however, they continue to track above the average as well.
Yeah, so what does this mean? It simply means that there's more properties transacting in this particular period of time compared to our long-term average. So there's more buyers purchasing properties, but at the same time, we're 31% below our long-term average in terms of the number of properties that are available or listed for sale. This excludes properties that don't hit major real estate portals. So this does exclude those properties that are transacting off market, but the total volume of properties that is available for sale appears to be much, much lower. So it's not just brand new listings that are coming to the market that are being snapped up quickly, but also some of those stale listings or those older listings are also being purchased, and that's why the supply is so tight right now across Brisbane.
Yeah, and the prestige market, that's still remaining very strong, particularly in Brisbane, when you've got your riverfront, your blue chip suburbs. So according to the Prestige Property Report, the spring edition, downsize of demand, interstate migration, and limited premium stock have kept that activity quite buoyant.
Yeah, and again, it's the same story regardless of which market segment we are looking at. Stock or listing volumes remain the primary driver of price pressure. And if we further break that down into the unit and townhouse market, at the Lift conference that Scott referenced at the beginning of this conference, we were fortunate to listen to Tim Lawless from the Quartile, and he actually stated and showed us some information about the volume of listings in the unit market versus the house market across Brisbane. And that unit market, which is experiencing much higher levels of growth, the volume of listings is much, much lower in that segment of the market compared to the housing market as well. So these are all the indicators that make it really important to understand the fundamentals of what's happening in Brisbane before you're making the purchase decision, so you know what competition you might be up against, and as an investor also, so you know what the immediate or short-term impact might be on property values.
So if we jump into some values, so we'll start with dwelling values in Greater Brisbane, as I mention all the time to our listeners. So Brisbane median dwelling values reached $969,868 in September. So that was a monthly growth of 1.2%, quarterly growth of 3.5%, and annual growth of 8.8%.
And we're going to get more specific in terms of rankings compared to other capital city markets when we break it down into the house market and the unit market because it's more relative, in my opinion. Dwelling values just groups everything into one, and it can actually be a little bit misleading in terms of what's happening in certain capital cities. So, at a dwelling value level, Brisbane does continue to outperform both Sydney and Melbourne. But let's break that down in the house market and the unit market so we can understand, the performance in different cities in more detail.
So just before we jump into the houses, but when we talk about the segments of the market again, it's not a surprise at all. When we talked about that, and I mentioned earlier that under that 1.5 mil mark, you talked about the unit and townhouse segment being really, really competitive. That bottom section is obviously the strongest this month as well.
Yes, that's the case here in Brisbane. 3.7% quarterly price movement in the most affordable segment of the market. That's the lowest quartile, or the lowest 25% of property values, compared to 3.2% movement in the middle segment of the market and 2.6% quarterly movement in the top end of the market. So the lowest quartile here in Brisbane, being the strongest in terms of growth, is actually in line with other capital city markets, including Perth and Adelaide. So it does highlight that affordability-led demand. But in contrast, Sydney and Melbourne's growth is concentrated in the middle market segments. So we are not seeing the same patterns across all markets, and that's actually a really interesting trend to observe and something that we're going to closely watch, because typically those segment movements are led by some of the larger capital cities, and then the smaller capitals can follow.
So if we break it down now into the house values, so house values rose 1.1% in September, taking that quarterly growth to 3.3% and annual growth 8.1%, with the new median value in Brisbane $1,062,109.
So if we compare that rate of growth in Brisbane in the house market of 1.1% throughout September to what we saw in August, you may recall from last month's episode that in August, 1.2% was the house price growth here in Brisbane. So that actually shows a very small slowdown in the rate of growth in the housing segment of the market here in Brisbane. What I will say, though, in terms of how Brisbane's performing against other capital city markets, we're in the top three in terms of that house price growth for the month of September. So we've got Hobart on 1.6% growth. We've also got Canberra on 2%. I'm sorry,
Perth at 1.6.
We've got Perth at 1.6. We've got Darwin at 2% growth. So these other capital city markets are still performing strongly on a month-by-month basis. Looking at the annual changes, Brisbane's sitting at 8.1%, and that's in second place only behind Darwin.
14.1%.
14.1% growth in the Darwin market. And of course, it's been a clear outperformer over the last 12 months.
Yeah. So as I said, $1,062,109 median value there for Brisbane. And that was the housing. So if we jump into the unit side of it, and as we've said so many times, it feels like this has gone on for quite a while, where the unit market has really outperformed. And again, it's outperformed again, recording a 1.7% growth in September. That's up from 1.3% in August.
Huge surge.
Big jump. Quarterly growth for units, and actually I must say I'm not surprised at that. I think I actually tipped 1.8% when we were talking in the office.
We have little bets every month when the data's released, and I ask all of the team, right, what have we seen, what do we think based on our on the ground observations in terms of price movements in the house market and the unit market, and we ask all of our buyers agents, all of our team members to submit their predictions, and then I'll announce the true results to the team. And it's a great way to reconcile what we're really seeing with what the data is showing us, and more times than not we're pretty spot on in terms of the trends, in terms of which market's outperforming the house market or the unit market. The magnitude of our accuracy, we're definitely not spot on in terms of the rate of growth, but we definitely are picking the trends.
As I said, my bet was 1.8, and not that I recommend betting and gamble responsibly, though. Say all that as well.
Never any money on the table.
No, never money. So as I said, 1.7%, August 1.3%.
Yep.
Quarterly growth for units hit 4.7% and an annual growth surge of 12.4%.
Yeah, that's huge. And when we're looking across all other capital city markets, Brisbane is well and truly ahead in terms of its annual growth performance in the unit market. So, be careful about the headlines that you might be reading, regardless of where you're reading them from, because if you have purchased a unit here in Brisbane in the last couple of years, your assets performance will have outperformed the housing market. And that's definitely not going to be the case in most other capital city markets. So be careful of the headlines that you're watching and where you're getting your information from. Here on the Brisbane Property Podcast, we'll always give you the truth.
And just for those people thinking about getting into the market, just one thing to consider, the median price now for a unit in Greater Brisbane is $755,087.
That's a lot.
Okay, that's the median price. So if you've got a budget under that, you're probably going to struggle or you're going to have to compromise on something. Okay, so that's just a tip for people that are thinking, oh, I could get into the market. And look, it's a good, strong market. I still think there's legs in the market as well. When you look at what they're building them for, the replacement cost and things like that. But yeah, there's a tip. So 755,000 roughly is the median. Well, the median price for a unit in Greater Brisbane.
I'm just going to quickly state, although we haven't talked specifically to the PropTrack data, that all PropTrack data shows the same trend in that the unit market has grown at a faster pace than the house market, but in both segments of the market, price growth has increased in Brisbane throughout September.
Now, I'm not going to break any news here when I go into the rental market.
Yeah.
Again, extremely tight. Vacancy rates, they edged up to 1% in September from 0.9% in August.
Yeah, but the big thing to keep in mind is that once again, unfortunately for tenants, rental growth has accelerated across Brisbane. So house rents annually have increased 5.4%. At the end of August, that was 5%. So we are seeing a re-acceleration in that rate of annual price growth. Unit rents are up 6.4% year on year, and this was 6.2% at the end of August. So again, in the unit market, we're seeing re-acceleration in the rate of rental price growth. So it's tough out there for tenants. It's a little bit more rewarding in terms of income returns for landlords. Let's not forget that landlords also have seen a significant increase in their costs. And the reason that rents are increasing is not because landlords are passing on their increased costs. This is market demand. It is driven by the fact that there is very low supply of rental properties, as evidenced by a 1% current rental vacancy rate. We also have seen the breakdown of rental vacancy rates in the unit market compared to the house market. Again, research from Cotality presented by Tim Lawless at the recent Lift conference. The unit market also has a much lower vacancy rate than the house market across Greater Brisbane. And this potentially is why we're seeing the unit rents increase at a faster rate than house rents. So these are all of the indicators from the data that we can pull to explain the story, explain what we're seeing on the ground, and therefore give light to what we expect to see in the future.
Gross yields remain steady. So in houses, 3.4%. That's a slight decline. In the units, it's a slight decline, I should say. So houses, 3.4%. Units, it's 4.3%. And that slight decline was 4.4%. It's a modest decline, but obviously the push and the affordability, the prices of properties going up is putting pressure on that gross yield side of things.
Yeah, so the yield, remember, is a percentage or a reflection of the income that an asset produces as a portion of its purchase price. Now, Brisbane long-term and historically has been known for much more attractive yields than some of the larger capital city markets, but those yields have been compressing, especially over the last 5 years as the capital value of assets, that is the cost to buy into the markets, has escalated so rapidly. But we've also seen, especially in the unit market, more so than the house market, but across all segments, we've seen this rapid acceleration in rents. Now, this will be capped out in some areas because of affordability constraints. We're already seeing that is playing out on the ground in terms of rents stabilising in some areas. but continuing to increase in other areas. When we're talking about median yields or gross yields, we're talking about that a reflection of the total market. But we've constantly spoken in this podcast about the fact that Brisbane is not a single property market, but we're talking as if it is one when we're talking to the whole data. There are many micro markets within Brisbane, and that is what local knowledge is able to extract and pull out for you to understand what's happening at a local level in different segments of this large Brisbane property market.
So it's a bit of a summary. Obviously, through September, Brisbane obviously stayed as one of the strongest capital cities in Australia. Dwelling values grew, as we talked about on the month, continued to grow, and units outperformed houses again, as we probably thought they would.
Yeah, and of course, now we're a couple of weeks into the first home buyer guarantee scheme being into effect. It will be interesting to see how that impacts the market, especially throughout the next couple of months as more and more first home buyers may roll into the market. And we're not yet sure what impact that will have long term. Is it going to be a short blip and a short-term change in demand like we've experienced throughout September in preparation for this legislation coming into effect, or is it going to sustain much higher demand long term? That's a little bit of an unknown at this point in time. But look, everything's under supply. There's not enough properties to buy in Brisbane. There's not enough properties to rent. We're in a really tight market, and we really need to see more properties built, and we need to see them built fast. And unfortunately, that is just not happening. So until that does, we're going to continue to see price pressure.
And I think we'll still continue to see that. I mean, we're coming up to, I talk about this all the time, we're coming up to the warmer months. We're in October now. I had to think about that for a while. And, we're sitting consistently in the early 30s up here. The days are absolutely beautiful.
It sounds like bragging.
You think it's summertime.
Especially when we were in Canberra recently and we were still wearing our puffer jackets. It was so cold.
That's not bragging, but when we talk about the Broncos women and the Broncos men winning and the Lions winning, that's a bit more bragging for Queenslanders, I think. So just to rub that into all the people down south.
Go the Maroons.
So, look, that's been a bit of a summary. As we said, when you talk about the numbers, $1 million next month on the current rate the way that it is, that's another $12,000 increase in a month.
Well, that's based on the dwelling value.
Dwelling value
growth. If you've got a $1 million unit budget, $17,000 in 4 weeks.
Yep.
Let's quantify these numbers. This is across just a month, 4 weeks. And as a buyer, you really need to be understanding this momentum in the market. Otherwise, you will continually fall behind the market. And that's where obviously a team of buyers agents like Streamline Property Buyers can really help you to position yourself to purchase sooner, because the longer you stay out of a market that's shifting so rapidly, the more it's likely to cost you long term.
My tip is, and I'm not betting on this one, but my tip is that next month we will be up again. From the activity we're seeing on the ground. I can't see it changing. I think there's a lot more to go in this, and Brisbane will continue to grow. We've got low supply, high demand, and we've got everything that everyone wants to do. They want to live in Queensland. Why wouldn't you?
Why wouldn't you?
Okay, thank you very much for listening. As usual, I will let Melinda wrap it up. It's been great talking to everyone again, and I will talk again next week. Thanks very much. Take care. Bye for now.
Thank you once again for joining us on the Brisbane Property Podcast. We hope you have enjoyed this market update episode, and please share this content with friends and family. If you do enjoy our content that we produce every single week for you, please leave us a review on your favourite platform. This helps other listeners and other viewers to find us, and it also helps people to get the value from the episodes that we produce. We hope you have a fabulous week once again, and we look forward to speaking with you again soon. Bye for now.